When people think about wealth, they imagine high salaries, big businesses, or lucky breakthroughs. They picture dramatic moments, sudden success, fast money. That is why Warren Buffett confuses so many people. He did not start with extraordinary incomes. He did not invent revolutionary technology. He did not chase trends or shortcuts. Yet over time, he built one of the largest personal fortunes in history. What makes Buffett different is not how loudly he plays the game, but how silently. His strategy does not impress people early. It does not look powerful in the beginning. It does not feel exciting, but over decades, it overwhelms almost every other approach. Why small income is not the real problem. Most people believe their main obstacle is income. They assume that if they earned more, wealth would follow naturally. Buffett disagrees. He believes the real problem is not how much you earn, but how your money behaves after you earn it. Two people can earn the same modest income and end up in completely different financial realities. One struggles forever, the other quietly builds wealth. The difference is not intelligence or luck, it is strategy. The core idea Buffett never stops talking about. Buffett has repeated the same idea for decades, often in simple language. He believes wealth is built by allowing compounding to work uninterrupted for a very long time. This sounds obvious, almost boring, but most people never actually do it. They interrupt compounding constantly, usually without realizing it. They chase faster results. They react emotionally. They move money too often. Buffett does the opposite. Why compounding fails for most people? Compounding is powerful, but fragile. It requires time, patience, and consistency. Most people break it early. They start investing, see slow progress, and lose interest. They panic during downturns and sell. They chase higher returns and reset their progress. Each interruption looks small, but compounding punishes inconsistency harshly. Buffett understands this deeply. That is why his strategy feels slow at first and unstoppable later. Why Buffett did not need a high salary. One of the most misunderstood facts about Buffett is that his wealth did not come from a massive salary. For much of his life, his income was modest compared to executives and celebrities. What mattered was what he did with that income. He invested early. He invested consistently. He avoided unnecessary losses. Most importantly, he let time do the heavy lifting. This is how small income turns into massive wealth. The hidden power of starting early, even with little. Buffett began investing as a child, not because he was rich, but because he understood time. Starting early gave compounding more room to work. But Buffett also emphasizes something else. Starting early is powerful. Starting consistently is more important. You do not need large amounts. You need continuity. Small contributions made regularly outperform large, irregular ones over time. Why Buffett avoids exceeding moves? Buffett avoids excitement. He avoids frequent trading. He avoids predictions. He avoids reacting to news. Excitement feels productive, but it often destroys compounding. Every unnecessary move adds friction. Every emotional decision increases risk. Buffett's silence is not passivity, it is discipline. The role of temperament in building wealth. Buffett often says temperament matters more than intelligence. You do not need complex strategies to build wealth. You need the ability to stay calm during volatility, ignore noise, stick to a long-term plan. Most people fail not because they lack knowledge, but because they lack emotional control. Buffett's strategy protects him from himself. What most people miss about Buffett's slow approach. Buffett's strategy looks slow only at the beginning. Over time, it accelerates. This creates an illusion. People see the end result and assume genius or luck. They miss the decades of consistency underneath. Small income becomes massive wealth not through intensity, but through endurance. And this is where Buffett's silent strategy becomes dangerous to ignore. Why Buffett treats time as the most valuable ingredient. One reason Warren Buffett's approach works so well with small income is that he treats time as the primary asset. Most people focus on returns first. They ask how much they can make this year or next year. Buffett reverses the question. He asks how long his money can stay productive without interruption. Time multiplies ordinary decisions into extraordinary outcomes. A modest return sustained for decades beats a high return that collapses under pressure. This is why Buffett rarely talks about timing the markets. Timing assumes precision. Time assumes patience. Patience wins more often. Why doing nothing is often the hardest move. Buffett is famous for inactivity. He buys infrequently. He sells even less. He waits for long stretches without changing course. For most people, this feels uncomfortable. Doing nothing feels irresponsible. Action feels like control. But Buffett understands a subtle truth. Most damage to wealth happens during unnecessary action. Fees accumulate, taxes trigger, emotions interfere. By doing less, he preserves compounding. Small income benefits enormously from this restraint because it cannot afford repeated resets. How costs silently destroy small accounts. One of Buffett's least dramatic but most important insights is about costs. Fees, taxes, and friction do not look dangerous in isolation. Over time, they are devastating. A small portfolio cannot absorb high costs. Every percentage point lost is capital that never compounds again. Buffett's preference for simplicity is not laziness. It is protection. Lower costs mean more money stays invested. More money invested for longer means compounding has room to work. This is especially critical for people starting with limited incomes. Why Buffett focuses on quality over activity. Buffett does not chase opportunities constantly. He waits for quality businesses, quality assets, and quality decisions reduce the need for frequent intervention. When you own something resilient, you do not need to react to every fluctuation. This matters because reaction is expensive. People with small income often feel pressure to make something happen. Buffett removes that pressure by choosing assets that can survive without constant attention. Stability supports patience. Patience supports growth, the discipline of saying no. Buffett's wealth is built as much on what he avoided as on what he chose. He says no to most opportunities. He ignores most noise. He resists most trends. Each no preserves focus. For someone with limited income, distraction is costly. Jumping between ideas interrupts compounding and increases mistakes. Buffett's discipline creates a narrow path and stays on it. That narrowness is a strength, not a weakness. Why small income benefits from predictability. Predictability is underrated. People assume higher returns require complexity and risk. Buffett disagrees. He prefers outcomes that are boring but dependable. Small income does not need brilliance. It needs reliability. When outcomes are predictable, planning becomes easier. When planning is easier, discipline improves. When discipline improves, compounding accelerates. This chain is fragile. Buffett protects it at every step. How emotional stability multiplies financial results. Buffett's calm demeanor is not a personality trait, it is a financial tool. Volatility does not scare him because he does not depend on short-term results. Small income investors often feel pressure because every fluctuation feels personal. Buffett removes that pressure by extending the timeline. When the timeline is long, short-term noise loses power. Decisions become clearer. Mistakes become rarer. Emotional stability compounds just like money does. Why consistency outperforms intensity. Many people try to compensate for small income with intensity. They take big risks. They chase high returns. They swing between optimism and fear. Buffett chooses consistency instead. Consistent savings, consistent investing, consistent behavior. Consistency turns modest effort into durable progress. Intensity creates peaks and crashes. Consistency creates momentum. For small income, momentum is everything. If this approach feels calmer and more realistic than most money advice, that is intentional. This channel focuses on strategies that work quietly over long periods, not ideas that feel exciting for a few months. If you want to understand how wealth is actually built without constant stress, make sure you are subscribed. Now let's continue.